Bring in our panel. The tech expert Lance Ulanoff is with us today, along with Gary B. Smith, Cadena Group, Scott Martin, Kingsview Asset Management. I should point out both Gary and Scott are Fox contributors. And Aaron Gibbs joins us from Gibbs Wealth Management. All right, welcome all. It's going to be a fun hour to go through all of this. We're going to start, guys, with Amazon. Amazon's the big one, and Amazon's numbers are just coming out. And in its third quarter, Amazon has already reported $96.1 billion in sales in a quarter. That is comfortably above the analyst estimates. They're supposed to be up 32.5%, as it were, and they blew through that, it looks like, with a net profit of more than $6 billion. On the EPS side, we'll get back to it in a moment, make sure it's comparable to analyst estimates. But a quick comment, and then I'll go to Lauren probably, from you, Scott Martin, on that. $96 billion quarter from a company that has really kind of epitomized how you know, for lack of a better word, thrive or take advantage of the situation that we've all been dealing with here for the better part of this year.
Yeah, epitomized how you're going to survive your life, maybe, just to get through all this. I love the way you kind of analyzed, I guess, or commentated on the number as far as the top-line revenue, Connell. I mean, give or take another couple of quarters. This is a company, boys and girls, that's going to be basically making in a year maybe $500 billion with a T dollars when they're all said and done with what they're doing right now. And that's really what I think just speaks to how great Amazon is. And here's the crazy thing. With respect to the coronavirus and all the spending at home, all the ordering and delivery and whatnot, the real story for Amazon, for us going forward as we hold Amazon here, is AWS, which was talked about last hour in the Claim and Countdown. I mean, yes, they're a retailer right now, but I'm telling you, the future of this company and why this company goes higher and higher in the future is because of AWS and all the explosive growth that lies there, which isn't even in the stock price today.
Speaking of taking advantage of working from home, a lot of people using AWS to do just that. All right, Lauren Simonetti, what do we have? Let's run through some of the figures here with Amazon as the stock's up 2% after hours.
It's a major beat. So this is the July to September quarter, and EPS came in at $12.37 versus the expectation of $7.41. Look, investors right now not disappointed. Continue to watch the reaction, though, because in the second quarter, they beat fivefold. So we have a big, expecting a lot to please Wall Street these days. One more point I want to give you. What's unusual this year is the fourth quarter would be the holiday sales period, but also the all-important Prime Day. The guidance that Amazon is giving for that quarter, $112 to $121 billion, far exceeding expectations, Connell.
The estimate was $112.3 billion for that quarter that you're talking about. So even the low end of that forecast is above the estimates. Aaron Gibbs, want to take a shot here at Amazon? Then we'll move on maybe to some of these other companies as they come out. But I don't know what we can even say about Amazon from an execution standpoint.
I know. Obviously they beat by 5 times last quarter, but even with Wall Street analysts knowing how well they beat last quarter, the whisper number was about $7.90, a little higher than consensus. And obviously they've blown through that again. So I think the only other thing we've really got to look at is what percentage is that coming from AWS, because typically it's about 2/3 of the actual contribution to profits. Like, that's really where the growth is coming from. And seeing that continued growth in AWS is what's going to carry them through into 2021. But yeah, absolutely another blowout quarter.
I'm sure Lauren's listening. Look that up if you can, and we'll come back on the AWS side. Want to keep the ball moving here and move to Google. Alphabet, its parent company, is just in with its third quarter results. So Susan is following that for us. What are we seeing from Alphabet,
pretty strong
Susan?
quarter here, Connell. And it looks like coming back from the decline in ad sales last time. So we're looking at earnings per share. This is the profit margin here, and the profit number coming in stronger than anticipated, $16.40 for the quarter. Analysts were looking for something at $11.29. This is a big
point.
That's been a big question mark, given where we are in the economy. You see at the bottom of your screen, it says Facebook earnings release. This stock looks like it's hovering between gains and losses in the couple of minutes since the earnings came out. Like I said, last quarter wouldn't shock you if they top estimates, which they did. But what do we see elsewhere in the numbers, Lauren, from Facebook?
Yeah. Let me start with the bad news, why the stock is likely down right now in the after hours. And that's, they say that for the fourth quarter, both daily and monthly active users won't be as strong as the third quarter. But since they just reported for the third quarter, here are those numbers. Both monthly and daily active users rising 12%. Monthly, 2.74 billion. Daily, 1.82 billion, both better than expected. Overall numbers in the third quarter for Facebook. EPS stronger than expected, $2.71 a share. Revenue rise, and this is mostly ad revenue, rising 22% to $21.47 billion. So those numbers all strong. Look at the stock now, down 2%. Here's another negative as to why. They're guiding for the fourth quarter that this ad revenue, which was stronger in the third quarter, it's not going to be as strong in the fourth as it is in this current third. Connell?
All right, so that'll be a question, Scott, right? With a lot of these companies, we said it at the top, is not so much what they say about the past, but what they say about the future, because, I'm not sure how it'll impact a company like Facebook or even some of these other tech companies on the consumer side, I could guess, with maybe Apple, which we'll talk about later. But it does look like, as strong as our economy was in terms of bouncing back last quarter with those record numbers, we kind of get a sense of what we're heading into now. The virus spikes, whether the lockdowns are coming, and the outlook for the future might not be the same as it was for last quarter. What do you say?
Yeah, that's fair. Obviously, Facebook has a little bit of political issues maybe that they're fighting here going forward as far as how they're going to operate their business, which obviously still needs to be, I think, worked out and maybe worked out of the stock. Now, to Lauren's point, how the stock has pulled back some, I mean, the stock was pretty hot today. It was up 5%, so it was probably priced for some sort of perfection. The other thing to know with Facebook that, we just tend to forget sometimes is that teeny little small company called Instagram that they own that is absolutely thriving and going bonkers. And I'm not afraid to admit that it's pretty much my favorite place to shop on. Yes, well, that's true on the internet because they know exactly what I want on there. So Instagram is another component to Facebook going forward, provided that doesn't get broken off, that I think helps this stock even if it pulls back here.
Not the first time you've come on this show and started a sentence with "I'm not afraid to admit," and it probably is something that you quite frankly should have been afraid to admit.
There's so many of those.
Be that as it may, I know. Yeah, be that as it may, we love you to death, and Instagram is the big driver. Think of where Facebook would be, by the way, if they didn't buy Instagram. Twitter's just coming out as well, and I'll work that, Aaron, into the conversation in terms of political risk. What did you make of what you saw on Capitol Hill from these CEOs, and how big a deal is this from an operational standpoint for the companies, the pressure they're going to be under, it would seem? I guess some of that, maybe a lot of it, depends on the election results, but the pressure that they're going to be under from Washington.
Yeah, I think as long as you're constantly bringing these CEOs back into congressional hearings, you're going to have those negative headlines and that negative push on these stocks. And so if they don't deliver blowout numbers, investors are going to be more hesitant. So they really need to beat. And I think that sort of speaks to what Facebook's done. They've beat it, but they haven't blown it out. And so that might be why we're seeing some of the stock pull back today. And just concerns about whether they're really going to lose their ad revenue. They're going to compress their margins if they have to spend money building new algorithms, creating new departments in order to address the concerns that we're seeing within Congress. So I think it's a real concern about future margins and advertising spend. And then we've even seen a big shift in advertisers move their dollars from Facebook into Snapchat and Pinterest, which have blown away numbers. We had a lot of advertisers talk about how they were shifting those dollars away from Facebook. And as long as they're being hauled in front of Congress, that trend might continue.
I will get you, Gary B., and Lance in on this discussion in a moment. Lauren, I was looking at the Twitter results.